I think that's a bear trap. So we're gonna revisit the lows. Things will get quite bad pretty soon.
That's not just some crypto influencer. That, my friends, is Jordi Alexander, founder of Selini Capital and one of the sharpest trading minds in the game. By day, he builds high-frequency trading systems. By night, he's a World Series of Poker bracelet winner. And today, we're picking his brain. Jordi is giving us an inside look at how he reads markets, picks trades, and navigates the shadowy world of crypto market making.
I'm kind of obsessive on getting a good price, because if you get a good entry, you can make other mistakes.
He pulls back the curtain on what's really happening behind token launches and how some market makers quietly extract value from communities and retail like you, and why the crypto liquidity games are sometimes far darker than anyone wants to admit.
There we're getting into, things that in traditional markets would be prosecutable market manipulation.
Jordi lays out the entire roadmap, where the pain is, what to expect next, and where he sees the opportunity. Because when the storm clears, he believes there's only one asset ready to lead.
This is the time for Bitcoin. It will shine.
Yeah.
It will have that resilience of gold on the downside, and then it will have kind of like the money printing upside.
This is a real-time download from a trader at the top of his game. And if you're trying to understand how the next phase of a cycle plays out and how to position for maximum upside, this episode you do not want to miss. So ladies and gentlemen, without further ado, let's bring onto the stage my interview with Jordi Alexander.
Jordi, welcome. Thanks for being here. Appreciate it.
Looking forward to chatting.
Yeah. So you've spent a lot of your whole life playing kind of high stakes games, right? Poker, chess, other things like that. How has that kind of relayed into currently what you're doing?
Yeah, I mean, every year I go to the World Series of Poker, even now that I'm not playing professionally anymore. And I spend a good 2-3 weeks trying to compete at the highest level and just disconnect from everything else, because it gives me fuel for the next year. Because I learn things, I learn about mindset, I learn about how to think about bets in a way that, you lose some bets, you win some bets, but overall you end up okay. So you don't blow up, you get good results. And every year I learn more stuff. So one of the things, one year, was this concept of how do you win at poker? Poker is just a series of hands. So you just play each hand perfectly, as perfectly as you can. And so you kind of chunk things into one hand at a time. And all the top players have figured this out. This is the right mindset. So you don't think about these stories of oh, I was doing well and now I'm not doing well. I'm hungry. All this stuff. Whenever you're in a hand, you just play it perfectly, and then, refresh, move on to the next one, and just kind of build these blocks together. So it's sort of like a blockchain of performance.
And so is that kind of the same mindset mentality that you go into? Because after that, you went into kind of building algos, high frequency trading algos, right?
Mm-hmm.
And
high frequency trading algos, and also a lot of discretionary trading. So I was a macro portfolio manager as well, running more of a discretionary macro book. Doing both at the same time is quite rare to do both. But, they kind of require you to find edge, both of them. And you need to figure out, what is my advantage? Why am I smarter than the market? Isn't the market efficient? Everyone says that everything's efficient. You can't. But the reality is some people make it efficient. And you can be one of the people that make it efficient.
How?
So you have to develop expertise at whatever specific thing you're doing. All the really, really successful people, I'm sure you know this, building a channel, you have to look at the details and really understand how everything forms together. And so with macro, it's fascinating because obviously there's, the central banks, there's currencies, and then you realize oh, some oil refinery blew up and suddenly that's affecting, because inflation's going to go up, and that everything kind of ties in. Same with crypto, there's so many parameters that go into success or not success.
So when you're trading, when you're doing discretionary trading at the fund or whatever, how all over the place kind of where are you from? Because a lot of times when I talk to people who are trading, they a lot of times aren't looking at like macro news fundamentals so much. They really trade charts. What was your style?
Yeah, no charts.
No charts.
I mean, you look at the chart just to see like, are we at?
But you're not looking at like moving averages.
I'm not trying to
RSI or something.
Zero that stuff.
Okay.
No breakout lines or trends, whatever. You look at the chart just to get a sense of, is the price relatively high or low over certain time horizons.
Yeah.
I'm kind of obsessive on like getting a good price, because if you get a good entry, you can make other mistakes. You can miss the top. You can make mistakes, but as long as your entry is like pretty cheap,
yeah.
If the thing doesn't go to zero, which some things do go to zero, so don't get me wrong, that can still fail. But I want to be relatively early, even if it's something with a lot of potential. I might not participate if I feel like it's sort of heated up too much and I've missed being getting a good entry. So entry, I focus a lot on the entry, and I try to like bring in a few pieces of information. So macro is like one of them, and other parameters. But the more they align, the bigger the bet. Because you're like, okay, all these things are kind of pointing in the same direction, and it amplifies the signal. That's much stronger than just having one approach like charts or fundamentals. People who try to just trade on fundamentals, they can do okay, but they'll have a lot of losses because they're not looking at things that can go wrong in macro and everything else.
So when you're looking at, I just want to double click on the entry point. So is that usually looking for maybe a new project, new token, something that is maybe it's from last run or the one before, maybe now it's significantly undervalued, and that's it's likely maybe it's one of the blue chips or one of the things that is likely to run, or is it potentially when we have a run already, but then you're just waiting for like a really big pullback when you think that we've kind of hit the bottom? Is that also a good entry? But even if it's already a $10 billion market cap, is it, so are you really looking for more earlier stage things, or just the right entry could be just like a big pullback like we had to 76 or something?
Could be a big pullback. Doesn't have to be in like an early project. Certainly, like I trade a lot of Bitcoin. It's a large amount of what I do. I take positions on. I think the early concept is more like around risk reward, because if your risk is not, you're like, okay, how bad can it get? That's always the first question I ask. If I'm going to buy something, or we short as well, we're long short, we can take the other direction. I have no qualms around like betting something's going to go down, because it's equally likely. You have to have that skill. I say, okay, what's the worst I can get? If you're going long, it's not that hard. You can look at some base value that this thing can get to, which is going to be the bad case scenario, and say, okay, we might lose 50%. If you're shorting, it's a little bit different. You have to, especially with crypto, because things just go like mental.
Yeah.
Trying to short a meme coin or something like that, I've tried to do many times, sometimes successfully, sometimes not. You just have to think that, this thing can go up 20 times.
Yeah.
I remember shorting Doge before it broke out in 2021, early. It was like half a cent. And like it went to 10 cents in one day. That was not fun.
Yeah. So are you using leverage on these trades?
I'm generally very well capitalized for the size, so I don't get liquidated. It's extremely rare to get liquidated. It's usually by mistake. It's happened maybe once or twice in my life. I remember 2 times, two big bad liquidations. But yeah, so risk reward, you look at these scenarios, how bad can it get? And then like, what am I sort of targeting here? Is there enough of an upside? I'll take a trade even if I don't like the asset, but I feel like it's sort of at a, like Ethereum at 1,500. Everyone hates it, but like there's some kind of value. It's not going to go that low. Maybe you buy it for a swing. The main thing is I don't look at time as a horizon. I look at outcome and price. So price is the horizon.
So you set targets,
and it can take an hour, and it can take a week, it can take a month. And I'm very patient. And I think that's usually the difference. People that are very used to having a time horizon, like, oh, I trade intraday. I want to go to sleep and I want to be flat at the end of the day. They have to specialize on like a time-based thing. Like just you have to get the catalyst. Catalyst coming, got it, in, out, go to sleep. Nice. For price targets, you just you might go against you. You're waiting. You have some plan though. You have an idea of why it's a good risk reward, and then you let it play out.
So it's pretty fascinating speaking to a trader that is not using charts. It's rare that I do. I think if I were to be a trader, I guess you could say I swing trade a bit, right? But I'm not an active trader. How do you go about figuring out which tokens you're going to trade? And when you're using things like macro, like you said before, maybe it's an oil well that blew up or something like that, or so maybe those kind of indicators on the like geopolitical or macro level would likely affect the market as a whole. But when you're looking for your good entries on other things, are you looking at maybe, are you doing research into the token itself to see like, oh, this thing has a catalyst that's coming up in a month. Likely that this feels like a good entry for this, but it's Sui, maybe because they have Sui Basecamp or they're launching the Sui Play or whatever. So how are you picking the tokens?
Yeah, definitely try to, so when I mentioned like 5 different pillars and trying to just include them, one of them is definitely going to be more fundamental based. What are they announcing? What are they working on? Do people realize that they're about to release, something that could be very good? Like WorldCoin had this presentation a few days ago in San Francisco, and people were speculating, what are they going to announce? Is Sam going to, they opened the US, they're doing some partnerships with Tinder, I saw, so you can have verified profiles.
Oh, really?
It's like human, because, AI bots are going to be everywhere. They're going to be taking over. So having like a human code on a profile can matter. And, WorldCoin ran up very hard going into that. So some people were obviously looking at this kind of event. That's one of the sectors. Long-term fundamentals, I think it's a bit trickier, but if it also aligns and it, you're like, okay, fundamentals long-term are okay.
Mm-hmm.
If they're not okay, I'll still take the trade. I'll just, want to get out of it relatively soon. And that's the trader in me. That's not the investor. But like sometimes you just see a nice trading setup. Something's oversold. There was one funny one recently. There was an AI token on Solana called Cerebro.
Yeah.
This was all the hype, like one of the hype tokens during this AI boom we had a few months ago. And it just went down from 900 million FDV to like 100 and then 50. And somewhere around 40, people realized that there was a lot of open interest on the perps because people were shorting it. And the open interest got bigger than the entire market cap, which is a very dangerous, like as a trading setup, it's like you can't lose basically because there's so many traps, there's so many trapped shorts that they haven't gotten out yet. If the amount of shorting is larger than the market cap, just it's a very technical setup. Basically, you start buying spot and they can't cover because they're trapped for bigger size than there is of spot, so they can't cover. I didn't trade it, so I was just watching people go out. It's a bit too small of a setup for me to look at, but that's a perfect example of a situation where, regardless of the asset being good or bad, you just get these trading setups.
So in that exact scenario, would the play there have been to buy spot, or is
yes.
or would, because I'm not really familiar with the setup that you just said and the whole shorting and the open positions, but would that play have been to buy spot?
Doesn't really matter if you buy spot or
would
perp.
Have been, but the bad idea would have been shorting it.
Yeah. No, you go long. You go long perp spot. And the market kind of resolved it. I mean, it went up 5x in a day because people were just blowing up the shorts. I mean, when you're shorting, like I wrote a thread about this a couple of years ago, and it still gets constantly pinged on Twitter, but it's called the dark art because shorting is a very dark art. It's not like you just, buy and we all have some flowers and we're long and together and kumbaya. It's a dark art. You can do very well at it, but it's very difficult. And there's these traps you have to avoid. And certainly, if there's too much short interest, it's very dangerous to join in. It's easy to join in when there's not a lot of shorts. And how do you know? The funding rates are like very positive. You're getting paid to short. Like no one's shorting. So the market will, pay you 10 basis points every few hours just to short. That's a good sign that, obviously the market's frothy when that happens. So you have to like not get liquidated. But it's a good sign that, risk reward might be good.
And so in that situation, you would want to short?
Yeah.
All right, let's get into, so you left, so you were doing quite well, I guess, at the trading and algos and things like that. And then you left and then you built Selini. and which is a market maker mostly and investment fund, right?
Yeah, I mean, we
Investment
still
balance sheet.
do all the algos, and we
Okay.
still do everything. I mean, when you're running a trading firm like that, technology is still at the center of what you're doing.
Right.
Yeah.
So tell us about market making in crypto. And I guess the first thing is, it has mostly a fairly negative sentiment amongst retail traders, crypto Twitter. Whenever something goes, whenever price pumps really hard, or you have something that happened with Mantra DAO, it's always like market makers who are at the heart of the bullets, the targets when that happens. Do you think that market makers deserve the kind of bad reputation that they get?
Yeah, it's kind of a weird phrase, market maker, because it means two completely different things, and they get bundled up in crypto, and we just call them all the same.
Mm.
There's like liquidity providing, which is more around just functioning the market. So just making sure that, different, because there's so many exchanges, everything's fragmented. You just want to have liquidity so people can trade and, not have slippage when they're trading. Just if they want to buy 10K of something, it doesn't move 20%.
Right.
So that's just liquidity providing. So you need someone to do that and do it in many exchanges, do it in many places, keep things in line. Now that's called market making, and also in traditional markets. In crypto, we also have something else, which is, you can colloquially call it active market making. Maybe a better phrase for you would not be to call it market making, but call it token consulting or something, or token management services, whatever you want to call it.
Price management services.
Yeah, I mean, we've had some of these, especially these Chinese firms. I don't want to call them market makers. They're not really providing liquidity. They're just, they say on their website, full cycle, token selling services or something. It's basically like telling projects like, we'll help you sell your token, like dump your tokens. So those two things, as you can imagine, are completely different. They get bundled into called market making. Some firms might do both, but most are just doing one or the other. So, the reason for the bad reputation is mainly because these active consultants are looking to max extract on these ones, and usually, it's not good for the community.
Yes.
Sometimes not even good for the project.
Well, I was going to ask you that next was going to be, how many times are the project founders, actively seeking and agreeing and knowing that the value that the goal is maximum extraction? It seems to me like, whenever I talk to, not whenever I talk to founders, but a lot of times when I talk to founders, like, I can't tell you how much emphasis they try to put around, the first day or the first week or 2 or 3 of trading, reducing float, so important that they have this and that, hype it all up. There's only really one reason why you want to do that, and that's value extracting on day one. And some people call it building a treasury, whatever it is. But for me, it's always seemed, it's always been a bit misleading to the public of like what the intention is here, right? And so they get the KOLs and stuff like that to go and hype this thing up on day one, and then they list it on the exchange, and then almost always comes down.
Yeah. I mean, if you look at the evolution, a few years ago, it was hard to launch a blockchain. You had to do a lot of technical stuff. It took months. It was hard to launch a token. A few people knew how to launch an ERC or whatever it was. When something launched, there weren't that many of them. Like, basically, if you're getting like a launch a week and they're all, high effort, the exchanges list most of them and everything's good. When you're in the pump fund era where, people click a button and just like new coin, it becomes critical to have a good start, because a lot of these just die and, no one wants to buy it day one. It's quite rare that there's a recovery. People need to kind of hype it, build it up. Oh, it's doing well. And then kind of price gets price and it's going, and the community forms after, and then it kind of just keeps going. So what founders realize, and kind of why we are at this unfortunate situation, is that they need to kind of growth hack this like TGE process. Because if somebody sees a bad launch after like months of airdrop farming and like, and then people only get like $20 on the airdrop, kills the sentiment, and then like there's no recovery because crypto is like short attention span. They move on to the next one. So what they started doing, those successful ones, like the more entrepreneurial ones, they started juicing these like launches just to kind of get into a thing, because then you get more listings, you get the next one, you get into like
volume,
perps, and then it sort of becomes like one of the mainstay projects. And they start being willing to do a lot of things during this like TG period to get that outcome. You mentioned like reducing the floats, and not a lot of people can dump. That one, to a certain extent makes sense in the sense of, the days of just like giving out massive airdrops and people hold them are for the most part gone. I mean, Hyperliquid managed to be an exception, maybe a few more exceptions. But for the most part, just giving people a ton of like free tokens for, participating in a bit of a test net or something was probably not a good idea. Like people are farming it industrially, getting 1,000 airdrops or something. It's not good. So to a certain extent, I understand that. Then, as you start seeing them trying to do deals to get like buying on day one to make sure that there's some funds coming in and buying, and maybe they give them some extra tokens, later to do this. And again, that can be good or bad. I'm not taking a clear judgment on that one because, to a certain extent, it can be a win-win scenario. The fund takes some risk. Maybe they're getting 30% discount for holding things for a year, but it'll be down more than 30% in a year. So they're still taking risk. There's like some of these things that, are gray area stuff. And then there's like the clear red flag stuff, which we've seen some of it come out, in recent times. You mentioned Mantra. There's been a few other projects that obviously had some bad press. And there we're getting into, things that in traditional markets will be prosecutable market manipulation, where the entire premise and planning and thought is going into it is literally just, how to manipulate certain kind of pump and dump dynamic or a certain extractive dynamic to an extent that, it's hard to say like what securities laws apply and don't apply, but certainly from a community standpoint, people don't like to see this. And it's very extractive on retail to extent more than it crosses the line. So you go to Vegas, you sit at the slot machine. Okay, maybe like you're having fun. Maybe you're giving 5% edge to the casino. So you bet $100, it'll take $5, and with some distribution, it'll give you 95 back, and that's fine. You're participating. Maybe you win, maybe you don't. But then you go, and then it's like you're getting 20 cents. It's extracting 80, something like that. People don't want to play that game. And I think we've seen that with Libra as well.
Yeah. So that's for sure. So from either, okay, so just so everyone knows too, whenever we've never worked together, from anything I've advised. Well, actually, you work on some projects I've advised, but anyway, the ones that I have talked to, I've always had really good things about Selini, which is your market making company. But for if a project founder is watching this, or maybe retail is doing due diligence on a project, seeing who the market makers are on board.
Yeah. How
does someone know who would be considered like a quality market maker that really genuinely, is there for the right purposes of helping the tokens get listed on the right exchanges, the right volume they need to be appealing, while the projects are sitting there trying to build, and get revenue and try to get client acquisition. You've got someone really on your side trying to help you on the trading side to make sure that your token, gets listed and all these kind of things. So what do you look for? What would someone look for? To find good market makers?
I mean, certainly we need to, again, split up the two things between like, the trading liquidity provision side and like the advising side. A good market maker in the traditional sense literally just means somebody who can show good quotes and, keep things functioning. It's a healthy liquidity. Maybe they can do on-chain stuff, keep the on-chain. If it's an on-chain launch, you certainly like need to be able to navigate DEXs. So all this stuff is, like a good market maker can do. And usually you don't want to get, a shady market maker to get anywhere near this kind of stuff. Then you have the strategic advising side. And those should really like, they can be even different firms. Like, you can use one firm for doing this stuff, and then you can find an advisor to help you with this stuff. But a lot of things you mentioned, like getting exchange listings, stuff like that, it's not a traditional market maker job to do that. It's more of somebody to give you advice on what do they need to see. Um, they obviously, like, these things are changing every month, so every month it'll be different. One month they're looking at social engagement a lot. Which project has that, because they want to get users, they want to get like new people. Some periods, they really start focusing on, like, they want to look at the fundamentals. What's the code? What is there something unique happening? It sort of like changes. User exchange is different. So on the advisory side, they should look at it as a separate thing to the market making, and they can pay the advisors as a grant or some bips of the project to just advise, and the market maker thing can be sort of separate. So that's very important to keep in mind as a structure instead of trying to combine them. Some market makers try to combine them, and that can be good or bad. Some projects might promise that they'll get them some listing on Robinhood or something, right? Those are usually like not coming into fruition, and if they want to try to play that game and get a listing and pay for it in some way, that they should probably do it separately. But to answer your question, like, who's good, who's not good, how can you tell? Reputation is the most important thing, because people see project after project, what's happening, what are the bad things that have happened. So at this point, there's been a lot of launches. So word of mouth from talking to founders, people that have been familiar with launches, is probably the most important. I wouldn't go with some no-name thing that's offering to pump 50 million into the chart. There's always some catch.
Yeah,
if it sounds too good to be true, it always is in crypto. I found relying on people that have competence. I mean, Selini, we do a lot of these like strategic advising as well, and try to help quality projects. We can only do so many, so there have to be other market makers around to service a lot of the other projects. There's way too many projects compared to what a single can service. So we try to not take too much, maybe like one a week kind of thing. It's hard to so we always have thoughts on who seems to be good and not good that we can refer if we're overworked.
Okay, now one more question on the market making side is because I personally have had this these issues, is how does somebody know if they're working with a bad market maker or someone that's necessarily not got their best interest at heart? Because a lot of times, these project founders, they're not experienced with the charts or how much liquidity should be there or how the liquidity should work. I've had a lot of experiences where advised projects or whatever, where again, the liquidity's not there, right? You try to go place an order, buy 5K, and it's 20% slippage, like you said. But also, it seems to be every time that we speak to these market makers, or I've heard it's they always know what to say to make it sound like it's perfectly good whatever they're doing. So what are some like signs that you're working with a market maker that maybe you should look somewhere else?
If there's no liquidity, why is there no liquidity? Probably because their job is not to provide liquidity, but to extract, right? So that's already like a very bad sign. That's a very clear one. That's probably the biggest one.
Yeah.
Secondly, like, are they trying to get more and more tokens? Like, you don't need a ton of loan, depending on the project size. For a very large project, 20, 25 bips is usually enough to be able to do a good job. For smaller projects that are under $1 billion, maybe it gets more like around that, like, a few percent kind of range. Depends on the size. But I will say that if the size is done correctly, where it's not too bad, not too, let's say it's like a few $1 million worth of loan for like a decent project.
And that's like half token, half
Usually it's all token.
Okay.
The projects don't like to give cash because they have some runway, they want to keep it.
Yeah.
So they'll give tokens. The market makers usually have to provide the dollar side of bits, and that's fine. We have inventory, we can do it. If you're a market maker and you don't have a few $1 million to put some bids out, then maybe you haven't been doing a good job anyway.
Yeah.
Loan size being correct. if things are not going well and things are dumping, it's not going to be the market maker. People like to point fingers. It's like, oh, the market maker is dumping. But if they only have 20 bips and you airdropped 15%, it's a drop in the bucket. You can barely like move anything. And, you have no impact. It's literally just the market sentiment and the market macro. What's happening. Are people buying tokens or not? Have you given away too many? So founders get way too over obsessed around, this 20 bip loan is responsible for the market dumping. Like, I can tell you categorically, like, it's not possible to, make things go down. Even these, these launches that you mentioned, like, usually go down. The reason is a lot of the hype is around the TG, and the day after the TG, there's a new TG, and people who just like to play launches and, guess what it's going to trade at, they've moved on to the next one. So there's this like natural downward drift, even for good projects. If anything, I would say what might make sense and what I've advised and we've done for a project sometimes is have a larger loan for the first week to kind of like keep the chart from going too high, and, return it after a week. So it kind of supports the price back, and smooth it out so it doesn't look like this constant, starts way too high and then drops. Just try to have a healthier chart.
Okay, so now let's move into where do you think that we are currently in the market cycle?
Yeah, I think we're in a point where we had a scary moment. These Trump tariffs were really scaring the entire world. Sold off heavily. Seems like April only ended up, close to flat, not that much down. So things are getting a bit risk on again. I think that's a bear trap. So we're gonna revisit the lows. Things will get quite bad pretty soon in equities. Have a pretty high degree of like the risk reward analysis definitely looks on the negative side. Given it was too big of a bounce back. There are fundamental recession concerns, and there are fundamental issues. So I'm expecting the next few months, equities will roll over. Alts will roll over because of that sort of liquidity
even
event.
More from where they are now.
Even more
pain in the alts.
More pain in alts. Maybe this is the hopium in me. I actually think that this is the time for Bitcoin. It will shine.
Yeah.
It will have that resilience of gold on the downside, and then it will have kind of like the money printing upside as soon as they kind of move on from trying to not ease. So I've said this, publicly about a month ago when Bitcoin was around 80. The setup is just all the factors just scream bullish, great risk reward. So I think like just this Bitcoin run is early, and will do tremendously well, even during this bloodbath, because people will be looking for like a refuge, and I think it will finally find a moment to do that.
Interesting. So to be clear, you think that probably in the not too distant future, maybe even imminently, you think we're just kind of up here at 97 for a short period of time?
Well, look, I think everything's going to sell off. All risk assets will sell off again in the next month or two.
Okay.
There'll be a bad moment. I think Bitcoin maybe goes to like the high 80s during the sell-off, but shows more resilience than everything else.
Yeah.
And then once people see the resilience, it sort of starts getting heavily bid, and we'll make all-time highs before too long. I think Q3 will have all-time highs, and very bullish setup after that, because things will get bad. Mm-hmm. So be patient. At some point, they'll get bad enough that we will have a lot of easing happening.
Yeah.
People try to avoid the money printing. They can't avoid it. Like there'll be easing coming later this year. But first, things have to get bad.
Yeah, that's one thing I was saying in one of my videos recently too. Like we need to see, and that's kind of what Palau is saying too. Like right now things kind of are fine, not really need. So what does that mean then for alts? Is it Q3 we kind of revisit all-time highs for Bitcoin as alts shortly following that, and then do you think that we're following the traditional 4-year cycle, which means that everyone is kind of expecting the end of this run to be the end of the year?
Yeah, I have very strong opinions on both of those.
Mm-hmm.
I think the 4-year cycle is done. It was fitting for the initial supply demand dynamics of Bitcoin and general markets. it's done. No more 4-year cycle. Trying to map where we are now is just a waste of time. Throw away that.
Yeah.
It worked for 10 years, 12 years. It's done. In terms of the altcoin season, also done. So altcoins will do well when Bitcoin does well, because naturally the digital economy, if you hold Bitcoin and you made a 50% on it, people will take some of it and speculate on other stuff because, they have more money, and why not try to take some more high leverage bets? So naturally, even though what we're seeing now with Bitcoin recovering somewhat, some stuff started popping up again, started getting these like 40% moves and different things. So that will consistently happen, but I wouldn't call that an alt season. It's not like these things are going to, outperform for months and months over Bitcoin. It's just that, people are back in the casino with some cash, and, Bitcoin is responsible for a lot of that sentiment.
Yeah, for sure. Okay. And then I also kind of subscribe to the idea that 4-year cycle is dead. And I think that, and I think a lot of that's led by the fact that we're going to have, I don't know at what rate, but we're going to see nations, corporations, and continued demand from ETFs and institutions. But also a lot of people we see are starting to play the Michael Saylor playbook. I think that's going to continue to grow. And so I think a lot of this will push us past the 4-year cycle into next year, and maybe even the year after that will be the Bitcoin bid. But maybe okay. So before we wrap up, let's go and talk about one of the things that we talked about before we started rolling was kind of this. What did you call it? High performer mindset. Can you kind of just explain what that is and how you kind of act on that?
Yeah, I mean, I think instead of playing status games and social games, just being very competent is something that we need more of in the world. And for young people, like learning how to perform under pressure. There's so many pressures. There's a rat race everywhere. There's a lot of competition, but it is good overall for our world if people are high performant. And personally, for myself, it's been a journey of growth and really learning how to bring out the potential, because you don't want to just keep the potential and live your life not really realizing it. So the mindset around fulfilling your potential and maximizing it is something that I live by.
Yeah.
And yeah, I want to spend maybe 10% of my time for the next year trying to put out advice that can help more people on that.
I think it's a really good kind of mindset and direction, because if we're both on the same page that maybe the 4-year cycle is dead, do you see a blow off top happening in Bitcoin at some point? And then of course, that could be at $500,000. It could be at $5 million. I don't know. What do you think? Do you see kind of at least a local top at some point in the next year, 2 years or something like that? If yes, at what point? What price? Sorry, what do you think that might be?
Because we don't know how quickly they're going to devalue the dollar side of it. So, it's Bitcoin / USD, and the USD side matters as much as the Bitcoin side. How much inflation do we get? How much printing? We don't really know that this dollar, we think of it as a stable thing, but it's not stable at all. So, what does $250,000 mean in 2 years? We don't know. Like, does that buy you a house? Does that buy you like a coffee? I'm not saying hyperinflation, but, still like 20% differences matter when it comes to supply growth. So roughly speaking, I think before we cool off, depending again on like how much, like you said, we might get country adoption, things like this. That like 250 to 500 range is probably where we're looking at before, calming down.
Yeah. All right, Jordi, thanks so much for coming on, man.
No.
Appreciate it.
Yeah. Thank you so much.
Yeah.